Hello friends, welcome to the target series of RBWM. As you know, in target series we are covering all the numericals, objective questions, case studies of all the subjects of JAIIB. So follow the series completely, follow all the subjects, both in English and Hindi, both of them are there. So follow all the subjects, follow all the series, like the video, subscribe to the video, like the channel. Okay? Let's start. See, today's topic is mortgage advice. Mortgage advice means it's a module D of your RBWM. In mortgage advice, this topic is, why is it important? Mortgage advice. The topic is important because in this means basic of your income in a bank is related to home loans now. Majority of the low income for the branches comes from home loans. Around 50 to 60% of the income per branch, roughly average. So that's why this has gained importance. Home loan, for that mortgage is required, and for that this advice is very important. Let's start. What is the maximum tenure allowed for reverse mortgage loan by banks to senior citizens? Reverse mortgage loan. What is the reverse mortgage loan? See, reverse mortgage loan is opposite of your regular mortgage. Okay, in regular mortgage, the customer pays back the loan. In reverse mortgage, the customer does not pay back the loan. Customer takes the loan, then after the expiry of the customer, after the customer dies, this property is sold by the bank and the loan is recovered. This is reverse mortgage loan. You can study in deep over here because otherwise it will take a lot of time. That is the basic logic of reverse mortgage. Bank pays to the customer the loan. It doesn't pay full amount. It pays in installments. So logically remember, this loan is for senior citizens above 60 years who don't have other income. Senior citizens above 60 years who don't have other income. That is very important. Otherwise, there are many senior citizens who are doing business, right? So it's not for them. So coming back to the question, what is the maximum tenure allowed for reverse mortgage loan by banks to senior citizens? 20 years, 10 years, 25 years, 15 years. Think. What should be the answer? Yes. It is 20 years. Okay, maximum loan tenure is 20 years. Got it? 20 years. Okay. Next. Equitable mortgage intent letter is obtained from. Equitable mortgage intent letter is obtained from. So it is obtained from whom? Equitable mortgage intent letter. Now what is intent basically? Intent means I have to do the mortgage. Who will give the intent then? Bank, borrower, sub-registrar or legal advisor of the bank. So it is obtained from whom? Give me in the comment section. Let me see. Equitable mortgage intent letter is obtained from. Yeah, it is from borrower. Intent. This is my property and I want to give the mortgage. So obviously I'll be required to give this intent letter, isn't it? So importantly remember, intent is given always by the one who is doing the mortgage. Okay? Got it? Next. What does acronym LTV stand for in context of mortgage? What does the acronym means short form. LTV stands for loan to value ratio, loan to tenure valuation, loan to lender's total value and leverage total value. What is the question? What is the answer over here? This we generally use it, isn't it? In all the loans we use this. LTV ratio. LTV ratio is 80%, LTV ratio is 75%. Means what? Loan to value ratio. What is loan to value ratio? See this. Suppose if my property is of 1 crore, how much loan can the bank give? Suppose if I am bringing the, see, LTV ratio is in all the loans. Anywhere I am doing the mortgage, there is a LTV ratio. Okay. So, coming back. So, if the value of my, let's say I am getting a home loan. So, what is the value of that house versus what is the loan given? Now, RBI has given 3 conditions in LTV ratio. Kindly note this. LTV ratio, RBI has given 3 conditions. What are the 3 conditions? For loans up to 30 lakhs, okay, up to 30 lakhs, you can use the LTV ratio of 90%. Okay, 90% up to 30 lakhs. 30 lakhs to 75 lakhs. Loan, this is loan amount. Okay, and this is LTV is over here. LTV. I'll just cut this. Okay, so loan and LTV ratio. For loan between 30 lakhs to 75 lakhs, I can use the LTV ratio of around 85%. And for the loan above 75 lakhs, I can use the LTV ratio of 75%. These are the LTV ratios given by RBI as a thumb rule to all the banks. See, thumb rule. RBI will not give you strict, because there can be a specific case where you have to give the higher amount. Suppose, let's say there is a big customer of mine, okay, of some bank. Let's say I am the MD of a bank, and there is a big customer. He wants to buy a flat of, let's say, 1.5 CR. Okay, 1.5 CR. He wants to buy a flat. So I'll say, see this, 75%. Now this customer is a big customer having many relationships with my bank, having some FDs, some investments, some CASA deposits, huge. So in that case, I have to go beyond the 75%. So I can go, subject to special approval from the board of directors, okay, or whichever is the authority given in the bank, okay. So case to case basis it can vary, but these are the general thumb rules given by RBI that you have to follow these generally. Okay, exceptions are allowed. So coming back, next question. So LTV stands for loan to value ratio. Which of the following mortgage types is characterized by a stable interest rate throughout the loan term, providing predictable monthly installment? So stable interest rate throughout the loan term, adjustable rate mortgage, fixed rate mortgage, usufructuary and reverse mortgage. Fixed EMI you are having. Obviously simple answer, isn't it? The answer is fixed rate loans, isn't it? Nowadays, even in variable rates, you can have the EMI same. But what happens? Understand the difference between fixed rate and variable rate. Okay? In fixed rate, you fix the rate, that this is the rate for your entire tenure. Whatever happens to repo, that's a separate question then. If repo falls down, I'll give the lower rates for others, then also you will have to pay the same rate because you have taken a fixed rate loan. Floating rate means this is adjustable rate. Adjustable or floating, one and the same thing. So in floating rate, what happens? If the repo rate goes down, my ROI will also go down. Okay, ROI will also go down. So if my ROI goes down, many times what does the bank do? Bank gives 2 options. One is either you reduce the EMI and keep the period same. Or second option is keep the EMI same and reduce the period. Both the options are available. Okay, so that's in floating. So fixed rate is simple, same, everything. Okay. Which of the following is a primary characteristic of an equitable mortgage? Primary important characteristic of equitable mortgage. See, equitable. What is equitable mortgage? Firstly, understand the difference. What is equitable? Yeah. So which is the primary this? See, first one, let's read. Formal registration of mortgage deed at sub-registrar's office in equitable mortgage. Physical transfer of properties, title deeds to the lender as collateral. Transfer of ownership of mortgaged property, okay, to the lender. Mandatory requirement of written and registered agreement. So which of them is the primary characteristic? Which of them is the primary characteristic over here? See, registration is not there in sub-register in this equitable mortgage. It is not done in equitable. Okay. Physical transfer of properties, title deeds to the lender. So physical transfer is not done. Always remember, title deeds are always in the name of the borrower only. Suppose if you buy a flat and you take the loan, so the name of yours is means on the property documents the name is yours only. Bank is shown as a borrower. So physical transfer of properties title is not happening in any mortgage. Forget this equitable mortgage. So this is also out. Transfer of ownership of mortgage property to the lender. Transfer of ownership. See, these two are same. Okay. So this is out. All these three are out. Mandatory requirement of written and registered agreement. Compulsory. Without this, you can't have a mortgage, isn't it? Got it? So without this, can you have a mortgage? No, you can't, isn't it? Equitable mortgage, understand the difference between registered and equitable. Registered, there are two types of mortgages. Registered, mainly, here. To be frank, there are actually many types of mortgages. But main difference I'll tell you. One is registered, second is equitable. In registered, you have to go to the sub-registrar office. See this part, formal registration, this is done in registered mortgage, A part. Whereas in equitable mortgage, you don't have to do any registration at sub-registrar office. But nowadays, what has been made compulsory, that if you do the equitable mortgage, at the month end, every month end, you have to give a notice to the sub-registrar, local sub-registrar, that these mortgages I have done, equitable mortgages. Now you take a notification of the same. So he'll keep a record of the same. Some fees is paid for that. That is to be done within 30, means once you do the mortgage, immediately in next 15 days you have to inform. Means after the month end. Okay. The list of all the mortgages is given. Got it? In that month. Which of the following is a potential disadvantage of an equitable mortgage from lender's perspective? Lender means bank. Bank's perspective. Potential disadvantage. High processing cost due to formal registration requirements. The borrower does not retain the possession of the property. Increased risk of fraud due to lack of public registration. Difficulty in enforcing foreclosure in case of default. Think. Which one? Disadvantage. You want a disadvantage now. Which one is a disadvantage? Yes? Think of it. See, first one. High processing cost due to formal registration. Do you register in equitable? Isn't it? You don't. So this is out. First one is out. The borrower does not retain the possession of the property. Does not retain. He retains. The borrower, the name on the property is of the borrower only. This is also out. Increased risk of fraud due to lack of public registration. This can be in. You don't have a registration. So if the borrower is doing a big fraud, many a times you won't come to know. Okay? But nowadays we have various methods of checking. Okay? Nowadays everything is online, so you can definitely go and check through various documentations. But earlier it was, this borrower could do a fraud in equitable mortgage because there is no registration of equitable mortgage. Right? So that's why there can be a fraud. So this is the one answer. Difficulty in enforcing foreclosure in case of defaults, not there. It's not there. Let it be any type of mortgage. Courts have given the clear jurisdiction that once it is a mortgage, let it be equitable or let it be this registered or anyone, bank has a right if it's a default. Okay, so this is also out. Only this is in. Increased risk of fraud due to lack of public registration. This is in. Okay. What is the primary purpose of property sale deed in the home loan application process? Means why do we require the sale deed between the borrower and the builder? Why do we require it? Okay, either between the builder or if it is a second-hand flat, then between the first seller and the borrower, anyone. So why do we require the sale deed? Simple. To show the property's market value, to confirm the absence of any legal dues, to legally transfer the ownership of the property, to verify the property's construction quality. Why do you require the sale deed? Yes. See this. Property's market value. Where do you get it? Property's market value, you get it from the valuer's report. On agreement, I can write anything. Suppose if there is a seller and I am a buyer, I can buy a flat of on agreement of let's say 40 lakhs. I can buy it for 1 crore. Who can stop me? It's after all the buyer and the seller. But we as a bank need to know the valuation, real valuation. So this you get it from the valuer's report. Valuer's report. Okay. To confirm the absence of any legal dues. This also is not there in the agreement. This you get it from search report. Search and title. Search report. Okay. To verify the property's construction quality, D1. How can you verify? You can verify it from the agreement, isn't it? For this, you will be needing a separate technician's report, isn't it? If you want to verify. So this is also out. So only in thing is this. To legally transfer the ownership of the property from the builder to the borrower. Okay? To legally transfer. So that is the answer, isn't it? Got it? Getting the point, everyone? See, these two reports, valuer's report and search report, are very much important. Okay? Valuer's report gives you the idea. What is the present cost in that area? Now, if I have done an agreement for, let's say, 1 crore rupees between the buyer and the seller, see this. There is a buyer, and there is a seller. So suppose if we do the agreement of 1 CR for any flat, will you finance 1 CR? If the valuation report, valuer tells the flat's cost is let's say 40, 50, 60 lakhs and I am doing the agreement for 1 CR, will you finance me on 1 CR or 60 lakhs? Of course, on 60 lakhs, isn't it? Lower of these two. Got it? So that's the importance of valuer's report. And search report, encumbrance. Encumbrance means whether there is any legal dues, whether somebody has claimed the right on that property. All these things are through search report. Okay? Next. Which of the following documents is typically required from the self-employed individuals to prove their income for a home loan? So self-employed, which of them is required from the self-employed? Okay. Form 16, latest salary slips, income tax returns for last 2-3 years, and employment confirmation letter. Self-employed. Self-employed. So the answer is, for self-employed, the answer is ITR. Okay, ITR, income tax returns. See this. For salaried, you can have all this. Form 16 is there, salary slips is there, employment confirmation, that is all there. But if I am a shopkeeper, simple shopkeeper, I am having a huge sale, but I am a shopkeeper. Who will give me the form 16? No one, isn't it? ITRs. Okay? Got it? Next. What does encumbrance certificate, EC, indicate in context of property documents for home loans? What does encumbrance certificate? Encumbrance. Now the other name for encumbrance certificate is search report. Encumbrance means what? If somebody is claiming on that property, that's encumbrance. So other name for this is search. Search and title report we call it. Right? Just now I told you. So what does this search report or encumbrance certificate in context of property documents give? What does it signify? Signify the property's age and construction, the market value of the property's freedom from legal dues, claims and outstanding loans, the history of property ownership. What does it signify? What does it signify? Yes. In fact, the answer can be E over here. E. C and D. C and D. See, property's freedom from legal dues, claims and outstanding. So this will be given. And history of property's ownership, that is also given. But this history is given for, as per the rules, it is 13 years, 1-3. 1-3, 13 years it's required. Okay? Because there is a law of limitation of 12 years, right? That's why this 13 years report is required. Got it? Clear? If a property is a part of housing society or built by a developer, what document might lenders require to confirm the seller has cleared all the dues with the society or the builder? Means if I am purchasing a flat, second-hand flat, let's say, from a society, in a cooperative society or any housing society, then which document will prove that the seller, whoever is selling me, has cleared all the dues? Property tax, occupancy certificate, NOC from the society or possession? Obviously, isn't it? What is the answer? Yes, what is the answer? The answer is society, NOC, isn't it? Society will give the NOC that he has paid all the dues of us. They will specifically speak of the society. Tax receipt and all these things are related to the local bodies, municipality or whatever it is. So that is not covered under this NOC. Only society dues are covered over here. Okay? Why is it crucial to submit a detailed estimate of construction costs when applying for home loan for an under construction or self-built property? Means, suppose if I am purchasing a under construction flat, means the construction is going on right now and I am purchasing that. So why is it compulsory to submit a detailed estimate of construction? Means that builder's estimate, I must get it. Of the flat, specifically of the flat, let's say. Or if I am constructing I am buying a land and then constructing my own house, then why is the estimate required? To assess the borrower's artistic preferences. What is this artistic? To help the bank determine the loan amount to be sanctioned. To verify the number of rooms in the property. To check the unauthorized construction details. Simple, isn't it? To help the bank determine the loan amount. Okay, from here we check the loan amount. What is crucial document for home loan, especially for apartments, that confirms the building's compliance with the approved plans and safety regulations and certifies its health, legal stability, you can call it, legal ability or stability. So, which document will prove that the compliance with approved plans, everything is there, property tax, encumbrance, occupancy and sale agreement. Which document will give you the idea that all the compliances of this of the sanction plans, of this FSI, all have been done. So it will be proven by occupancy certificate. Okay, occupancy. Got it? Occupancy certificate. So now, this was it about this today's session. Now before going, let me show you. Join the new batches ASAP. The new batches have just started. Okay? Just they have started. Join this ASAP. Always join the batches through the app. First download the app, then join the batches. Go to Adda 24/7. Click on JAIIB and CIB. Click on JAIIB November. See this. Now we will see the 4 options. 2 Mahapacks, Officers Batch Bilingual, Officers Batch English. See this, English batch. Join the English batch. This one. Join Officers Batch English. Okay. Just now starting, it is. Okay. 2nd August it's starting. All the numericals, objective questions, case studies, everything is covered in details. You get ebooks, mock tests, live classes, everything, isn't it? Join this ASAP. And use discount is going on. What is the discount? Look at this. Click on buy now. Put the code Y432. Y432. See this. 80% discount plus 1% extra. 81 through the app. Also, I will suggest you join the Mahapack. See this. In Mahapack, if you see, JAIIB Instrument Mahapack. If you see, you get physical books plus ebooks as well. Physical and ebooks, both. Okay, you get this, ebooks and physical books. Plus you get mock tests. Plus you get 15 plus batches per subject. 15 plus per subject. That many times revision. And right now you are getting double validity. You buy for 6 months, you get it for 12 months. Buy for 12 months, you get it for 24 months. Of course, this 80 and 81% discount is there. Y432. 80% discount plus 1% extra. So what all you are getting? 81% discount, 15 plus batches, double validity, okay, ebooks, mock tests. It's a win-win situation. Join ASAP.